Good morning and welcome to the HEIQ PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to the management team of HEIQ. Carlo, Sava, good morning to you both.
Good morning.
Good morning.
Wonderful. Welcome, dear shareholders, to HEIQ PLC and our interim results as per December 2023. I would like to walk you into the presentation. I start with our disclaimer and remind you on the terms of this presentation, and we will go through our agenda with first the business report and then a strategy update and outlook for 2024. Now, into the business report, and we start with what have we done in 2023, what have been our key initiatives that we have been driving. We have been focused on cost-based reduction very strongly, given the market downturn in 2022. And to give you an example, we were able to reduce from 2022 the HR costs by 17%, also thanks to strong relocation to our new hub in Portugal. We backwards integrated and have been able to keep expanding our margins of our top-selling products. This effort in this year alone has paid a 6% margin increase that we were able to bring back. This all in very difficult times with a buyer's market where capturing more margins was only possible to strong effort in backwards integration. We also reduced our exposure to demand fluctuations in the market by complementing our product range with some more basics. So we are able now to make more profit per customer. And here also important, we haven't lost one customer. It's just that our customers have significantly less business because of the lowered consumer demand and the overstocking, as we will see on the right side. We have continued to investing into our highly promising ventures, and we've done this with prudence. So we have contained the overall cash out, and we've very strongly prioritized our innovation portfolio by putting first those ones who can cash in first. We have, as a next item, improved the net working capital management, especially on the inventories and on the trade receivables, and that has helped us a lot to strengthen our financial position. The financial reporting was also strengthened. We added 5 people in the course of the year to this process in Portugal, and are now much better positioned with our capabilities. We improved our global business processes overall, and we have been strengthening our internal controls. This is now resourced by a dedicated team with a leadership and 2 employees, and I'm also happy to confirm that we have engaged Ernst & Young to support us as consultant in the internal control system. So I'm positive that we are on the right track to address all our deficiencies. Lastly, we decided to extend our financial year 2023 to be a long year of 18 months, ending in June this year, and this will facilitate our new auditor to do a timely audit. Now, we have talked in the past on the main challenges that we faced in 2023. Just to recap them very quickly, there was a difficulty to sell sufficiently, so that the top line suffered, and that has mainly been impacted by what are historically high inventories from brands and retailers. Just to remind you, last quarter 2023, the historic inventories were still at plus 23% for US retailers and brands, and this over a 15-year average. So you can see this was a big issue and led to less demand from brands and retailers to the value chain, and the bullwhip effect caused the disruption over the past basically 18 months of the main value chains in which we are present. Also in 2023, we still had to wrestle with the complexity of our organization following the M&As that we had started doing in 2021. And this had been identified as deficiency in the internal control system in the Deloitte audit from the previous year. We have addressed a lot of these deficiencies already, and we are now well placed and optimistic that the improvements that we have made will pay off. Let's now dive into the markets, and if we go into 2023 and we look here, 2022, you see that we had a significant dip in all our three main commercial business units: textiles and flooring, life science, and antimicrobials. This was in the second half of the year the shock to most of our industries. You can see that we, as well as our industries, have not recovered yet on this. To point out here maybe a detail, the business unit life sciences was strongly reduced by the mask sales who were allocated to this business unit. We have now all but stopped this activity. In the other business units, textiles and flooring and antimicrobials, it is the demand from consumers that had been reduced, and this caused high inventories at brands and retailers and was thereby diminished. If we look at the regions where we had the drop, also here you can see that in all three regions where HEIQ is active, the Americas, Asia, and Europe, the drop in the second half year 22 was clear. So it was an industry-wide problem that we were faced with. You can here see already a recovery in our Asian markets. This is also strongly to be tied back to the change in leadership in China, which is still one of the biggest markets for us. At this point, I hand over to Xaver to lead us into the results of 2023.
Thank you, Carlo. If we look at the sales and gross margin development over the past, what Carlo explained with the significant drop in market demand at the end of 2022, you see that from first half 22 to second half 22, the revenue has decreased almost 30%. This led also to a negative impact on our gross margin, and since then we have stabilized and recovered a little bit in terms of sales but also in terms of margin. At the end of 22, with the short-term change in the market conditions, we had to record allowances on inventories driven by excess inventory based on the then reduced demand forecasts, and that's what significantly impacted our overall gross margin. Also at the end of 23, we have, for a limited number of products, had to record again or additional allowances as the recovery is slower than previously anticipated. If we factor out these allowances on inventories, you see that the adjusted gross margin is with 35% and 41% at the end of these 2 years, significantly higher, and that in the second half 23 we have been able to recover gross margins to the level before this demand shock in the industry, which is achieved and supported by progressed cost optimization through backward integration, and so that on an adjusted basis we have been able to claw back margin, and of course are working hard to hopefully recover in terms of sales as well as soon as markets improve. If we look at the overall income statement for the 12 months ending December, the decrease in revenues, it's 11.6% for the 12 months, which is offset by a recovery in gross margin. This led to an overall improvement of the gross profit nominal amount. And the SG&A expenses have also been reduced by, in total, 4.5%, whereas it is notable that our SG&A costs include over 2.5 million of costs related to our venture innovations, which are not yet commercial. And if we look into the SG&A on a little bit further, I go into more details on that. In 23, at the end of the year, as announced, we have been able to settle a litigation which led to an income of 2.75 million before related lawyer and other costs, which is included in the other income position. We still have an operating loss and a negative EBITDA, but it's significantly improved overall as we were able to stabilize and improve our financial performance in course of the year. If we look into our SG&A costs, as mentioned before, almost 10% of our overall SG&A costs in 23 relate to the venture units. And if we look into the nature of the SG&A costs, you see that personal expenses account for the largest part of our SG&A costs, 45% in 2023. And as we are already, as we discussed in previous presentations as well, we have taken decisive measures, mainly in terms of our workforce, by relocating to less expensive locations, and thus have been able to reduce on a half-year view the costs for personnel by 17% if we compare the first half year 2022 to the second half year 23. The other SG&A costs are subject to higher fluctuations, and if we in the past 2 years in particular, we see the high impact of the long-lasting audit in 22, which led to high SG&A costs in the second half of 22, and in the second half of 23, a big contribution to the increased SG&A costs there is coming from the litigation and the related legal costs. Sorry. If we move on to the balance sheet, you see that the total assets are on a comparable level to the December 2022, whereas in particular inventories and trade receivable position improved. Our equity is reduced following the loss that we had to face, and you also see that the short-term borrowings increased in order to finance our operations throughout the year. And at the end of December, we also received a shareholder loan and increased our short-term borrowings in view of the acquisition of the Portugal site in early 2024. If you look at the cash flow statement, I'd like to point out that we really managed to stabilize our financial situation, and in the second half 2023 see a positive cash flow after the operations after this key figure has been negative in the more recent past. We have in 2023 reduced the capex significantly to contain cash, and the disposal of minorities you see as cash in from financing activities. That's reflecting the successful development of HEIQ Ionic and Hugo Boss and MRS investing into the equity of the subsidiary of HEIQ Ionic. The proceeds from borrowing, as mentioned, with 7 million in 2023, net proceeds reflect the increase of our credit lines. In 2024, in Q1 2024, as already mentioned, we acquired a site in Portugal consisting of actually 2 properties for in total about 5 million euros, which we had pre-financed from our own cash and short-term shareholder loans, and has now been refinanced in Q1 through the equity raise in March, and also end of March we were able to secure local long-term credit financing on the property for the smaller lot, and while the second lot is still in negotiation to be refinanced locally with long-term debts. Overall, looking back at 2023, we have been able to stabilize, to adapt to the market changes, to the drastic market changes end of 2022, and to stabilize our financial position. Although there's a long way to fully recover along the markets which have to improve, but we managed clearly to stabilize our financial position and are now. With that, I hand back to Carlo to look into 2024 and an update on the strategy in general.
Super. Thank you, Xaver. And yes, let's go inside the structure that we have today. I want to remind you we have 3 growth units: the textile and flooring business unit, we have the life science business unit, and the antimicrobials business unit. These 3 units are commercial, and they have been facing the winds out there on the market over the last years. Historically, they always were able to generate sufficient profits to finance our ventures. In the late time, that had become very difficult to impossible, and we had to resort to finance the ventures directly in order to maintain the value creation of them. We have 3 ventures today. The most ready one is HEIQ Ionic, our new climate positive fiber, then followed by ECOS, which is our transparent conductive coating technology, and then our highly porous graphene membrane with HEIQ Graphenix. Below all run our innovation services. They are the funnel to bring new projects in and enhance technologies and custom tailor-made develop them with commercial customers. Below that are our group functions, which are mainly located in Portugal. Now, if we are moving into one important change that we have made, over the last year is to really strengthen each single team in our growth units and in our venture units. I start on the bottom left with our growth units. We were able to recruit and put together a top shot team with Mike Abbott as CEO. He comes from HEIQ, one of the largest brands in the US, brands and retailers. Raquel Vaz-Vieira as CTO. She succeeded Walter Nassel in this function. She originally comes from Devan Pulkra, so an industry player and competitor of ours. Chris Key joined us as COO from Huntsman, another competitor, and Andreas Fetke as Chief Commercial Officer from Rudolf, which is a further competitor, and Robert Liu, who joined us as General Manager in China, replacing our previous General Manager, who comes from Clariant, also a competitor. So you see a top shot team that we put together for our most important commercial business unit, which has almost 100 employees overall, and is serving all the regions with the innovation technologies that we have already commercialized. In the antimicrobials, we have Tom Ellefson, who is running a 10-people outfit out of Thailand and is focusing strongly on this market of antimicrobials, which has also strongly suffered by sagging consumer demand and high inventories. We do foresee that in the second half of the year, also this market will see a comeback. And our business unit Life Science with our probiotic HEIQ Symbio approach, where Dr. Robin Timmerman is heading as CEO and Mauricio Costa Ladeira is heading as COO. We did add it as Chief Commercial Officer, Ms. Hoik van Lam, who was previously engaged mainly in our differentiation, leading our differentiation. She's now making a step into the high potential to commercialize this technology platform, and we'll see later in multiple industries. If I move up to the venture units, and I start here on the top right, Ionic, our most ready one. We brought in as chair Mr. Van de Kerkhoff. Robert comes from Lenzing, the largest man-made cellulosic fiber producer. He was in the board. He was Chief Commercial Officer, Chief Sustainability Officer there. So clearly somebody that understands the business of fibers inside out. And we also brought on the operational side Mr. Julian Bourne, a CEO. He was until recently the CEO of Lycra, the largest specialty fiber maker out there. So here a very good completion to our team that we had already in place with Martin Gebert-Germ as COO and Dr. Enrique Herrero Acero, a CTO, both from the Indorama Group, the largest polyester maker in the world. So top team in our most promising venture. Then our two younger ventures, Graphenix, where myself and my co-founder Mary Height are very active. We're less than 5 people in this venture that are informing it and growing it to market readiness. And HEIQ Ecos, where we have a dedicated team with Tom Ellefson as business development and Dr. Oliver Zech on the innovation side. So you see these dedicated teams, they have high experience in management in each field, and they really allow us to inform each business unit and venture unit separately and with a dedicated team and budget. In the board of directors, there is a nearby change. We have Robert Van de Kerkhoff, who takes over the chair, with Esther Dale Kolb, who is retiring after 4 years. And we're very happy that we could have a fantastic transition at the chair level, and are very confident that we will be able, with the board, to manage the market in the next years. I quickly dive now into our commercial business units, just to give you the flavor of 2024 and the outlook. If we start with our biggest one, textiles and floorings, then we come from 18 months of stagnation after the brand demand and the retailer demand strongly dropped in the second half of 2022. What we have managed to do is to win discounters. They were the only segment that showed growth in this market, and I'm happy to tell you that we were able to bring major projects with programs with Lidl in Europe, Primark, and also Target in the US. And maybe to point out why we were able to win such projects, it's thanks to our innovations. It's thanks to the capability to bring new technologies to market, even in difficult times. If you look at our flooring operational unit within this business unit, then we have been able to backwards integrate. This is very important for us to gain more market share in what is a saturated market and capture more margins. So this project was successful and contributes to improving our operational efficiency. If we look at the third operational unit that is in this business unit, the industrial chemicals, which we are selling mainly in the US, and that business more than doubled. There's a clear trend of reindustrialization in the US, and that really is paying off on demonstrating that our strategy to invest in our US asset was sound and is paying off. So we're trying to give more momentum to our US presence and participate to this reindustrialization of the United States. Important is what we really managed to do is to maintain our capabilities in place despite us trying to reduce the cost of it and strengthen the focus. And thanks to a very agile relocation to our new hub in Portugal, we were able to preserve capabilities and are really ready to rebound as soon as the markets recover. And here again, there's a consensus in the market that in the second half of this year, the inventories should deplete and we should see a recovery on the demand. So we're well positioned with this business unit to make the most out of that. In the business unit Life Science, we did stop, as mentioned before, our medical mask business, and we're fully focusing on our HEIQ SynBio platform. This platform has established probiotic cleaners for hospital in 2023. I think we serve more than 100 hospitals through our distributors today. We were able, following a lot of successes with peer-reviewed papers, I remind the Lancet publication for this technology, which showed it to be equally good as disinfectants in the hospital field, but not causing any antimicrobial or microbial resistances from multi-resistant pathogens like MRSA. And these great results were able to change also the European regulation on detergents to include probiotic cleaners. And we expect a big switch in this industry in this year and are ready to grow significantly with major deals and with channel partners that we have identified to serve the different markets. We have demonstrated here another important thing in 2023, that this technology platform can generate recurring sales in other fields. These other industry fields that we have informed are water treatment, animal husbandry, and also cosmetics. And we are scaling up the business now to secure leading channel partners for full commercialization in these adjacent industries that the technology platform can inform. If you move to business unit antimicrobials, then they suffered as the textiles from a reduced consumer demand for fast-moving consumer goods. And also here, only thanks to our innovations, we managed to win new programs. We successfully launched what is our HEIQ Chill innovation. It's a cooling technology that is given to master batchers, and they can implement then in fiber spinning this cooling technology, which is now built into the fiber for the first time. And we have some of the largest sport brands that are looking into this to be the first implementers. One of such large sport brands that we won last year is Anta, the Chinese Nike, and they're active in apparel and footwear. They have adopted one of our existing technologies, HEIQ Life Natural, as antimicrobial for their kids line. So that's a very nice win with a Chinese brand that our team in China managed to pull off. Also in this business unit, we maintain our capabilities, and we're able to have a structure that allows us to rebound when the markets recover. So if we move into our venture business units, then the most mature one is HEIQ. It's the world's first climate positive cellulose filament fiber, which is capable to replace synthetic fibers such as polyester or oil-made fibers. Here last year we have been very successfully commercializing our first 3 drops to the market with German brand Hugo Boss. They were very well received by the industry, and we're very positive for the further development of the adoption of our new fiber in the textile brand space. What we managed to do is to bring a top-notch leadership team, as I showed you before. This is really a unique thing. We have a disruptive technology, and now we have a Champions League leadership team in place. Hence, we took the next step and invested into building the first large manufacturing plant of 3,000 tons per year in Portugal. And in order to do that, we acquired land and building, 25,000 square meters. More on that later. The next milestone for HEIQ HEIQ is financing this 3,000-ton manufacturing plant. That's no easy undertaking. It's a large sum. In total, it will be approximately 100 new jobs that we will create. So a venture that will be value creating very much in the near future for our shareholders. The second one, HEIQ ECOS. It's a silver nanowire technology for low emissivity coatings. It's transparent, it's conductive, it reflects infrared, and it allows stealth functionality. So what we have done here is we have focused on a business development with leading industrial partners and in different fields. So we have we've gone out to the market and worked with automotive leaders and building insulation leaders and greenhouse foil leaders and organic photovoltaic leaders, and also defense companies that are in the stealth functionality and the signature management. With all of these fields, we have been able to make great progress. On top of that, we secured 300K third-party funding, as well as an additional 200K R&D grants for this technology. This is still a very young venture unit. But we're moving as next milestone to have commercialization agreements with our most promising application partners, as mentioned above, in these industries, and that will then resource and grow the team to be in 2024 more capable to deliver to the market and move out. We come to our youngest venture. Our highly porous graphene membrane, which we are using to build up novel solid-state batteries and electronic vents. Here we were able last year to sign a first joint development agreement with an industry partner for first application development. So this is a big step forward, big success for the technology. We also secured an additional 300K R&D grants last year. So also here, a good progress on the IP creation for this technology. We established this venture now in Park Innovare at the Paul Scherrer Institute in Switzerland, where we will localize our first pilot commercialization line, which will arrive to us in the second quarter this year and then be commissioned by the end of the year. So here the next milestone is to focus on long-term development agreement with leading specialty battery makers that are showing a high interest in our technology platform as we speak. So I come to our new site in Portugal, just to give a bit more detail, a big investment for us, just towards the end of the year. And this to inform our venture HEIQ HEIQ and give it a home to build the first 3,000-ton fiber production facility. In total, we acquired 25,000 square meter lands. It's 2 lots. On top of the left, you see the high buildings white, that's the first lot that we have already refinanced. And then middle picture, the large hall in which we will establish our fiber spinning lines. In total, we paid 5 million, including taxes. This was significantly below market price, so it was a very good deal for us. We are also able to relocate our current team in Portugal, our service centers, our textile R&D and group services, these buildings, and that's 35 employees. That will happen in the second half of this year, and will allow us to reduce the rent costs that we had on one side and reduce thereby the mortgages that we are currently refinancing. We will do some renovation works under a state grant program. We have been filed as a project of national strategic importance in Portugal. I remind you that we received a 10 million grant from the state of Portugal already for building this new factory. A second grant for another 20 million is submitted, and we are with a very dedicated team now planning in detail the scale up of our technology. Over the long run, this new site allows us to relocate other functions and other operations from HEIQ. It's a very large site, and it's really our new industrial hub. With this, I close our presentation and I move into the Q&A.
Carlo, Zava, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions throughout today's presentation. Now, please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Super, thank you. So I'll start, and we'll share questions between me and Xaver. So the first question here is, can you detail the measures you have implemented to enhance operational efficiency? How are these adjustments expected to support HEIQ through continued market volatility? So yes, the market remains volatile. Again, we in the industry, we have a consensus that the second half of the year for most of our business should see a rebound. This is strictly driven by inventories that are depleting. So that's data that we can check, especially in the US. We see that on the statistics. So we do expect volatility will persist. Hopefully, there's no new events that will toss new coins into what the market dynamics are. But we're well positioned and have done the homework on the operational efficiency. Again, keep in mind, HEIQ has a focus strategy of innovation, and operational efficiency is a secondary strategy. We have informed that very thoroughly this year. And I want to point out that especially the backwards integration on some of our top sellers is helping us a lot to gain more margins and or have more competitive pricing, and thereby gain more volumes on the market and use our capabilities to the maximum available capability in place. So backwards integration was a strategic focus, which the team has executed very well. We have done centralization of production. And here we have focused on the US. As you saw before, the US market is growing. There's a reindustrialization, hence our focus and our further investment in this market is paying off, and this gives us more operational efficiency in running our productions out of the US. A big effort has been in better sourcing. There was a lot of volatility in the sourcing market over the last 3 years, basically. So putting more resources here, diversifying our supply chain, negotiating for better terms. That has been a continuous strategy and action by our teams to improve the operational efficiency. Lastly, I point out that we have and are still finalizing to bring all our companies and mergers, M&As that we had onto the same ERP platform, so that we have an integrated software system that allows us to optimize our operational processes and have a good visibility on our cost of goods sold. So all these measures put together are measures that we've taken to improve our operational efficiency. So we're confident that we are much better positioned, much more competitive than we were before this crisis on the operational efficiency strategy. Next question here is, how are you evaluating the potential returns on investment in our venture initiatives like HEIQ Ionic and HEIQ Graphenix compared to our traditional business units? What criteria that HEIQ use to balance investments between maintaining core businesses and scaling new ventures? So this is a very good question. I want to point out here, if you take our venture HEIQ Ionics, we had investments by Hugo Boss and by MAS, which is the largest garment maker in South Asia, at well over 100 million value of this venture alone. And yes, they're strategic investors, so they have an interest in making their industry more sustainable. But it shows you the value creation that we can do and reach with our ventures. Now, Graphenix is that you have mentioned in your question is one of the most promising technologies. Here we are now informing as first application field batteries, and our bet is that we can have double energy density, and obviously that could be a game changer in an industry which is seeing tremendous growth with the electrification, and where we are fully in the trend with lighter, more energy dense and faster charging battery prototypes. How do we balance between investments between maintaining core business and scaling new business? Yes, this is always a difficult choice. So how do you value your chances of success? We have three main ventures at different degrees of readiness. I think we feel very confident with HEIQ Ionic and the market introduction by Hugo Boss that we are onto something really. So we have started pooling more resources into this vehicle, and we did this pragmatically by financing the venture subsidiary directly by diluting ourselves as HEIQ PLC in the subsidiary and bringing in brands and garment makers as strategic investors. There's always an analysis: where's the risk profile, the technology readiness of these ventures. In Ionic, we're clearly 8 out of 9 if you take the technology readiness level from NASA. If we move in the others, Graphenix is at 5, and ECOS Graphenix is at 4, and ECOS is at 5. So there's still more risk in these ventures. Hence, we're trying to leverage the investment there with a lot of government grants that we are deploying in there. Overall, it's a return of investment calculation that we make with the businesses. Are the commercial businesses in growth markets? Are our innovations that we have on the starting line capable to give us more than average industrial growth? And based on the internal rate of return that we calculate, we decide how many of our resources do we deploy. Obviously, there's always an opportunity for us to have with a venture take the Graphenix, which is still at the highest risk, but also the biggest market that we could disrupt. There's opportunity for strong value creation if we are, for example, considering spinning out the technology and listing it separately. Okay, I take the next question here with innovation central to your strategy? How does the company plan to maintain its competitive edge? What are the key challenges and opportunity HEIQ anticipates in its innovation pipeline? So to comment here, our innovation strategy really relies on a couple of key elements. One is that we are focused on client-led innovation. So 80% of our innovations comes from an input from a client that we have on a market need. So a real world problem that we need to solve with science. And the way how we inform this innovation is by working on the research stage with over 30 universities worldwide and leveraging grants. So we are quickly and cheaply validating the hypothesis. And once we move a proof of concept into our own development teams, we are then able to bring technologies that have a high likelihood of success because they're one client-led and two have been thoroughly informed and de-risked before we are putting our investment on it. So that's the backbone of our innovation strategy. You can say it's an orchestrated network innovation structure that we have created, and this allows us to maintain a competitive edge. We have much more technology platforms than our peers in the industry. HEIQ today has 7. A typical company our size would have probably 2. And this allows us to be very agile in fulfilling the needs and demands of our clients for innovation. The key challenges ahead for our innovation pipeline is that the growth units, which historically have been financing our ventures, have suffered a very difficult market environment and basically take care of themselves but can't take care of the ventures. And this is definitely the challenge if you take a venture like HEIQ, the new fiber. The market opportunity is to replace 135 billion market of oil-based fibers, but it requires a tremendous amount of investment. So it's very capital intensive, and one of the challenges is here we have an extremely promising new technology, but it needs very high levels of capital to hyperscale over the next years. And this is one of the challenges that you reach if you're trying to deploy a disruptive technology to market. So there's many ways how we are mitigating these risks and difficulties, but this is transparently one of the key issues that we are facing. And we have the next question here. Also, with the upcoming changes in HEIQ's board, how do you anticipate these changes will influence its strategic direction? What qualities and experiences do the new members bring to support HEIQ's growth ambitions? So again, here the new chair that is joining, Robert van de Kerkhoff. He comes from Lenzing. Lenzing is a listed company in Austria with 8,000 employees. They are the world leader in man-made cellulosic fibers. HEIQ AeoniQ is a cellulosic fiber, a filament fiber. Lenzing is mainly focused on staple fibers, so short fibers. Robert brings a lot of experience from that specific industry, and here you can see that we wanted to complement the board with an industry leader in this field. Robert was the head of the European Fiber Association for many years as chairman, so he really knows the industry inside out, and this will help our Champions League team in AeoniQ to profit from this knowledge that Robert is bringing to the board. We all profit from his knowledge as a board member and chairman, as Lenzing is a publicly listed company. So here we have strengthened our publicly listed DNA in the board, and we are working with Robert and the board on what our strategy or orientation will be. Here we have started our project Matterhorn, where we are looking into all options for our technology platforms that we have built up and commercialized or are building up and commercializing in the near future. And I think all cards are open. And with Robert, we definitely bring somebody in that complements very well the board, and I'm positive that we will be able to come up with very strong strategic fit to our opportunity basket that we have created. Take the next question. What % of HEIQ Ionic does HEIQ still own? I am correct in thinking that your strategy is to sell stakes in this business to fund a hopefully massive future scale up. Yes, that is correct. That's what we did. So given the difficulty to refinance at Topco for large capital and the current valuation, we have done it in the subsidiary with strategic partners. And this has allowed us to finance Ionic to the current stage. We have today a 93% shareholding in HEIQ Ionic, and we're now planning to finance Portugal and then also the next bigger brother of Portugal, so 3,000 tons and 30,000 tons, for which we are looking also at options in Morocco. So here, yes, we will keep diluting in the subsidiary ourselves at the right time, at the right valuation point, in order to establish and create scale. I move to the next question. Sorry if I sound provocative, but I don't hear any critical remarks. All seems to be going for the best, while the share price is going towards zero. Yes, good point. No, not everything is going for the best. I think this has been the most testing time for the company ever. And if you have a strategy that with growth units, you finance your value creation ventures, and your market breaks away from 1 month to the other by almost half, you are in a tough spot. And we have been in a tough spot for the last 2 years. So it has been really an intense work, a very stressful time. We have relocated a large part of our capabilities, that means people, from countries like Switzerland to countries like Portugal. Well, we have a different salary level, but similar capability level. And we managed to do this transfer of capability in a very, very short time. All the while we were integrating as companies still, all the while we were increasing or growing our ventures, which are the real value creation, which we couldn't just stop and give up. So we needed to pursue that. And all this has been extremely demanding and extremely challenging for our leadership team and every single HEIQ, and that has been working very hard to keep us afloat in the storm while not losing our value creating potential. The stock price, yes, it's not hasn't been going well. I'm still the largest shareholder, and I share the burden here. And I believe in our technologies and our company. It's also why I just reinvested in the last capital increase, significantly upping my stake, and have confidence that we will be able to bounce back when the markets return with our growth units and keep value creating with our ventures. Okay, please explain the thinking behind the extension to fiscal 23-24. Is there a change in the scope of consolidation in the next fiscal year? Xaver, you want to take this one?
Yes, no, there is no change in the scope of consolidation in that sense intended. The thinking or the rationale behind the extension of the financial year is to facilitate the onboarding of an incoming auditor, with the previous auditor resigning only weeks before the year end. It's almost impossible for a new auditor to complete the audit within the required timelines, which in our case would be end of April for a December year end, and therefore we have taken the decision to extend to the June year end in order to allow the incoming auditor to do to have enough time for onboarding and execution of the audit work in a proper manner. That's the main rationale behind the extension.
Okay, this is the follow-up question is how close we are to announcing and appointing a new auditor. That I give to you too.
We are progressing. It's work in progress. It's not easy under the given circumstances, and we will update the markets as soon as we have tangible results. I don't want to promise a date that is not only in our hands to achieve. So, but we will keep the market updated, and I hope that we can do so as soon as possible, of course.
Okay, here we have a question on our board, how we are remunerating our board members, and if they are incentivized through HEIQ shares. So we have the executive directors are participating. That's myself and Xaver in the board are participating through the stock option program that the company has. So yes, we are incentivized through HEIQ shares as executive directors. However, the decision was that the non-executive directors should remain independent and not be incentivized to HEIQ shares. So the remuneration there is handled in cash. And I take the last question here. Please clarify probability and timing behind the new 20 million grant application in Portugal. If this is coming from a government-related capital pool for startup, scale-up, and ventures. So this is we have different vehicles in Portugal. One vehicle that we are utilizing is European grants that are going to Portugal to develop the region. That was our first grant. It's a project called Bioeconomia. And there we got the first 10 million grant to build a plant for HEIQ, a technology platform. The second grant we requested in the same dimension, but in another vehicle that the government is offering. And in this vehicle, we have been confirmed that we have been selected as project of national strategic importance. Portugal has a very healthy textile industry. In total, almost 150,000 people work there. It's one of their main contributor to a positive trading balance as a country on GDP terms. So it's very significant, and basically the industry is localized 50 kilometers around our new plant. Now, one thing that Portugal doesn't have is fibers. They only make fabrics and garments, and we will be the first major fiber player in what is still a significant textile industry. So we are strategically adding a lot of value to that industry and to that hub. Hence the strategic national importance, and hence we do expect that we will get rapid feedback. When I talk rapid feedback, I talk about months. It's always difficult to give forecasts on government decisions. Portugal just changed the government. There's a new prime minister that still needs to form his cabinet, but we're confident that before summer comes, we will be able to have a response on our grant request that is part of our financing strategy for HEIQ HEIQ. So with this last question, I close just in time our Q&A.
Carlo, Xaver, thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide with their feedback, which I know is particularly important to yourselves and the company, Carlo, can I please just ask you for a few closing comments?
Yes, so I would like to thank all our shareholders who have stayed on board in rocky times. We have done the hard work that needed to be done to patch the holes that the market has shot into us. This strategy has worked. We have not sacrificed our ventures. We have kept grooming them and growing them, so the value creation potential is intact. And I'm optimistic that with a market bouncing back, hopefully already in the second half of this year, we will be able to show better results and also have a better ability to finance our very promising venture technologies and bring them to full market readiness and market presence. With this, I thank you very much, and I wish you a wonderful Easter.
Carlo, Zava, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This may only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of HEIQ PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you very much.
Thank you.